Good morning. Well, he says accidents are starting to happen. And when we say that, what it means is historically, when we get our internals getting, to an extreme, be careful. As mentioned last week, things don't turn on a dime. And to say that they've turned today, I wouldn't say that. Now it's still an uptrend. The S&Ps haven't tagged that 460 or gotten above it. That's still very possible. But yesterday was a little narrow range day, and so a slowing momentum candle. Still got the void below. Things are gapping lower, right? Looks like right to the low, maybe a little bit below it. So a little bit of a bearish gap down. It would be much more bearish if this was a range expansion bar rather than the narrow range bar. And of course, none of us know how the day is going to end. Right now, it's weak, gapping lower, and the door is open to moving lower. It's looking at the hourly chart. You see the void of the wide range bar on the daily. You see how it's moved up there. Well, sure, Dan. Probability of a pullback increased last week when the internals reached an extreme. But as mentioned, things don't turn on a dime when these internals reach an extreme. Historically, they don't. I've seen it a couple of times in many, many years, but it typically doesn't happen. Not with narrow bars like this. But anyway, the earnings are coming out, and now you see Netflix gapping down, Tesla's gapping down. I saw a news thing, somebody, whoever it was, I don't know, saying Tesla's only worth $85. And there are other things that are gapping lower this morning. So more accidents, it's just a way of saying all of a sudden now we're getting gaps below, bullish bars and trends, and that is likely the beginning of some corrective price action. But I wouldn't count things out. It's just, as we've said, be careful, smaller positions, especially overnights, just in case, you don't want any kind of disasters. Minor support is still very far away. That being said, as I mentioned yesterday, when you get a range expansion bar, and you say, oh, can it stay in the upper half, ideally the upper third, give or take. I'm trying to draw a straight line there, but anyway, let's just throw that there. And so the gap down is still in the top of the range of the day before yesterday's bar. It's still okay. But based on the structure, the intraday structure here, there is the potential for prices to fall. Where would they likely fall to? So you see where my cursor is on the hourly chart and the 15-minute chart. When you see overlapping opens and closes on a higher time frame, there's going to be some kind of a little base on the smaller time frame, and you can see it there on the 15-minute. So pulling back into that 453-ish area, let's just call it, would be acceptable, but that's only a very small shelf of support. So we'll see how buyers step in or whatever they're going to do. Right now, they're below all of those pivots and leaving a congestion area intraday. So that's what we're starting with today, some bearishness, and I would say very strong support is at the bottom of this wide range bar, because you've got these overlapping bars, these smaller bars in the bottom of that bar. So that being said, look where SPX premiums are, and ideally they'd be below that area, give or take. See, Jake is written right what I have down to on the SPX chart. All right, so look, 45.20. Now, if things begin to drop at the open, you can get below that. You should be able to get below that. If they drop quickly, you will. And so getting below this bar, right, which is, you can see the little price there, 40, close to 45.08-ish, something like that. I don't think you get that low. unless things really dropped fast, but like something a little bit lower if possible would be fine. And so even, looking at 4,500, of course, and look at the cursor on the hourly chart, it's lined up with that pivot there. So in this area between 4,500 and 4,520 is going to be, should be very significant support. And it would take a while, right? A while, I'm thinking, to be able to drop down that far today. So yeah, 45.15. Yeah, absolutely. And you can see the pivot there on the hourly, and the range expansion bar. Look at on the 15-minute, and this is what's nice as far as this particular setup right there, is that 15-minute range expansion bar. Look how it lines up with the prior pivot low right there. So one of the things that you look for as an intraday trader is a scenario like this. Even though that fell quite a bit on a 15-minute chart, it fell right into the prior support on the left there where buyers stepped up again. So that's why we look to the left, right? See what support is there, and where buyers will show up, and you mark those areas off and you get ready. Right? Like I got an alert right here, down here around 45.15-ish, because that's where a pivot is. And if it comes down there, right, today, I know that it will. I'm really thinking more like, hey, this isn't a really bullish trend. I know it's a little extended. It hasn't gotten up here yet. Yeah, we got this bearish stuff going on, the NASDAQ, and I think I even saw IBM lower. But hey, if the financials hold up and oil, it's going to be hard to drag the S&P down. But the Qs, a little more susceptible. You can see what they're down here, right? And YM isn't down very much. S&Ps, you can see here, they're down. It's not really a big deal, right? And however, you can see the head and shoulders and the neckline right there, where it's starting to move down below, and you can see the void. Now you do have these overlapping bars, and it's starting to touch that bar and setting the alert, right? That's why that was blinking. These bars here, overlapping bars, there's some support in that area. Now, when I look at this overlapping bar support versus this long area of topping patterns and the breakout failure, potential stopping point, but ultimately maybe not. The bottom of this bottoming tail bar right there, there's going to be a pivot in a smaller time frame on that bar, which is at 45.70-ish. Should be a bottoming tail, 45.70. Yeah, you could see it right there. I know I got that scrunched up, but if you spread your charts out, you'll see it. So when you see this kind of price action in a higher time frame, there's got to be some kind of support area down there, bottoming tail bar, range expansion, bottoming tail bar. So again, that should be a pretty good support point in the futures, should it come down to that level. The NQs, momentum slowed, starting to move lower, and well, this is minor support. If it at this point extended here, the depth of this retracement would be bearish because of the strength of this trend. The same concept, overlapping opens and closes right here, 15,680, 98 or so, give or take. There's got to be some support there. All right. And you can see it right here. This little congestion area right there, 15,700. Any move down toward that, where this pivot is, and this larger congestion area, buyers should show up. So monitor that. Looking at the Qs, right, without the 24-hour chart, and see the congestion in the support area there, 380-ish, give or take. Where is it? 382. And pretty close, a little further down toward that whole number, and those pivots should be fine. I think it should hold there because of the strength of this trend. And we'll see, at the end of the week, well, of course, assuming this does turn around, and there's more earnings coming out. So up toward 400 ultimately. All right. The Russell, momentum slowing. It's up here near this 2000 or close to it. I guess it looks like it definitely tagged it. So at the top of the trading range, we see an index at the top of the trading range. It could get a little bit above it. There are times where it pushes up a little bit, but as mentioned, internals are where they are. Accidents happening. Yeah, just recognize what it is and don't get hurt. YM, peekabooed above this resistance area and a little bit of rejection there yesterday. What the transports? Anyway, transports are doing good. They're almost to this pivot. So as we look at different markets indices, we see that some still have room to get to resistance areas. So while we have some bearish price action this morning, it's not bearish enough to say, hey, these markets can't recover and move up again. I just want to peek at the Dow. Right, we talked about that wide range bar, and it's moved above this pivot high here. So that's looking good, and it's got room to fall back a bit without damaging anything. What are interest rates doing? They're up here a little bit this morning. Made sense. We talked about this support earlier in the week. Playing a little bit on maybe the bearishness of today's market price action. And let me just post this to Ian. $2 saying VIX, a couple of green candles on daily greater than 1400. Well, if you're watching, it was interesting as the market was moving up yesterday and even the day before, the VIX hasn't been dropping. So, a little bit of, I don't believe this, and it's not dropping down here below these lows as it's retesting this. We talked about breakouts, and no matter what it is, initially coming back down into the base again. And so let's see. You can see this is above 14 now, which would make sense since the market's moving, down. So more things coming together that suggest corrective price action, and we'll see how far it goes. At least these markets have moved up enough to allow a decent pullback without really damaging the charts. The dollar moving up a little bit here. So let's look at something for a second here. It's based on where things are at here now. Let's say prices pulled back toward minus support. Okay. See is that would be a 2% correction, a little over 2% correction now, down to the 20 on S&P, about 3%. Not a big deal. And pushing through minus support and hitting that 20 MA where there is some congestion there, a 3% correction. I think, and look, let's just see here. It's down here in this gap fill area. I think buyers would be happy to show up there, and that would not violate the uptrend. So we'll see how this plays out, but keep that in mind, because in the moment as day traders that, you see prices coming down, it's like, oh my God, look how things are coming down. I wouldn't want to see it come down in one day, but if it was to fall down here by the middle of next week into the Fed announcement, probably be fine. So we'll keep it in perspective. What do we got here? Oil doing nothing. Gold consolidating, doing nothing. Silver down a little bit. No biggie. And Bitcoin doing nothing. So there you have it. Little corrective price action ahead, some accidents beginning, and be aware of what's reporting earnings so you don't get blindsided by the unexpected. All yours, Dan.
Good morning. Let's see, somebody on YouTube asked about snow. And I just looked it up. We had a put spread on snow, but Hidden Knowledge Hub is his screen handle. We closed ours out at a nice profit yesterday. So I don't know if you are a subscriber and get our Telegram, because in pre-market yesterday, I said, let's move stop on the gap up. Let's move stop. I think I said tighter of 30-minute low or break even, whatever the heck it was. But to answer your question, if you are in it, yes, that's kind of our default. If something gaps over or under a stop, give it 30 minutes, unless it's such an ugly gap where you say, man, oh man, I'd rather be short this thing, not long. And then I would say you can, maybe use a 5-minute. But on this, yeah, it's, there'll be a lot of these overlapping bars. There'll be a lot of support there on the hourly. Yeah, let's jump to earnings here. Two of the big boys and the Fangs kicked it off last night. Where are you? Wow, I got a big interest list here from the other day. I'll have to go through that later. All right. So Tesla, there was a lot of talk in the green room yesterday about, oh, I think Tesla and Netflix are going to blow out earnings. And I had to keep reminding people, I don't care about a blowout number. I care about the market reaction to the number. So see, Tesla had blowout numbers. And look at the stock down 13 bucks, 278. So it's gapping into this support right here. I do not have a pre-market bias, so just it goes in the watch category. 450. That's a nasty gap. That's just a classic bull trap now. Everyone holding this, into earnings, saying I'm going to be a hero, now are waking up with big losses on their hands. So that a lot of horizontal support here, but I'm open to yeah, Jerry, we're talking about it now. So Jerry, just because of the gap in the support, though, that is a nasty gap under a green bar. But I see it's stabilizing here pre-market, and it's in the category of we're going to wait and see. Well, it's not a climactic buy setup on a gap. Climactics are 5 or more fluid bars far from the 20. So this is not one a climactic, but let's continue here. There's a lot of earnings. IWM 133.75. Let's see, that one's gapping. That's going to be a ton of hourly support. I can tell, go look yourself. And an hourly chart is upper left is 15. So it's obviously a couple more days back. But 30-minute high, we'll see. I might be inclined to do a put spread for 1 DTE. I love credit spreads on earnings trades if they set up. All right, CCI 108. That's an ugly gap. That'd be a call spread candidate. If it's 30-minute low, it's kind of my default. LBS 5750. it's a gap into no man's land. In fact, we looked yesterday and I was looking for a 64.54 condor into earnings, and there was just no juice. But now with the gap here, you could do a 62 condor 54. So that's what I'll be looking for if there's any juice for next week. MDB, Jerry. Yeah, I that was a nice gap breakout on Tuesday. And you can see here 15-minute chart. So that actually, what I saw that yesterday morning, and I would have given that as a put spread, but for the spreads are crazy. So Greg, yeah, your car you mentioned, same. Look at this thing gapping down 232. This would be a a beautiful call spread candidate, but the go through our checklist. Earnings, liquidity, what are you going to pay me for the DTE? And the spreads are a veto. KMI, flat, nothing. And I deleted a couple of these already, just for sake of time, so I'm not going to cover them all. All right, this is going into the catastrophic gap category. And what I mean by that is, it is a bearish gap, there's no question about it. But it is so big that I'm just going to see if buyers step up. So this is Discover Financial, I think. And I think I read, the risk of charge-offs are greater than people thought. EFX, I don't see any prints here, but it shows it down a lot. To right here to 225, right to this prior low. So 30-minute high. That would be a put spread I do. I'm still no pattern. It's going to delete you. Dan asking about SMCI. I don't see any great pattern, Dan. It's a 180 reversal. I'm assuming it's earnings the way it's whipping around here pre-market, and it's opening relatively flat. It's a Climo weekly, monthly. I just don't know. Nothing's jumping out at me right now. Bid looks like a continuation short. You all know how my eye just jumps out at things. Look at my eye jumped out at this M top also on the monthly after a little breakout failure. So I had daily, weekly, monthly all in alignment to go lower. So I'm going to set on I'm going to set an alarm at 276. But I posted Amgen. Amgen looks fantastic. We have a put spread on it. All right, what I saying? 276. Hey, Dan Blackburn, welcome. He said he's new on YouTube. 276. So Dan, what you really need to do is spend $7 and take a trial to our green room, because then, we shut down YouTube at 9:30, and then you get to stay with us and see how these things play out in real time. All right, so bid got that. And here, look at Amgen, bottom right. So we have a put spread under the week's low here. That's a 1, 2, 3. And it, I see it bouncing around here pre-market, but ideally they'll just chop around and hold relative strength and then take out yesterday's high after 10 a.m. and that would be ideal. UAL gapping up, but no patterns, big topping pattern daily, weekly, at least for a retracement or a top. Rexer, I don't see a gap, but no pattern to me. So I just delete you. I have enough to watch that I'm always trying to delete things. This, I can't see where it's gapping. I was looking to sell a $50 put on this, but there was no premium. Alcoa, I said yesterday, if it can take out, today's Thursday, if it can take out Tuesday's high. And then Sam IAM gave me Cenex yesterday. And I even said, well, if we get positive Alcoa news, that might get this thing going. This is an inverse head and shoulder. Left shoulder head, right shoulder, bullish engulfing, price void. Looks fantastic. So I see it gapping up here, so I need a pullback. Stop yesterday low. So I like Cenex. I have that in a window on my other computer. And there's a lot of regional banks reporting, but banks have had a good run. The ones I looked at already are mixed. Some up, some down. I've deleted a bunch already. Here's one that's down, cold. But, you know, I don't know what to do with this. I mean, Condor maybe. But nothing's jumping out as what I call tier one, which is, hey, you're looking really good. So my tier one so far long are Cenex and Amgen. Can't tell where you're gapping, but you're up a lot. Calex. Oh, Alex, this is the one I actually have a $45 put spread on into earnings. Because you helped me say it was a real company, so thanks. Wait, so that, let's see, you're gapping the 50. This is a tier one trade. It's gapping to the high of yesterday. So this, if it can take out 30-minute high, I got a buy setup, bottoming tail on major support in a trading range. So there, I got another tier one setup for us. Now, again, tier one means it's going in a 5-minute window and I'm watching for a setup in the first 30 minutes. It doesn't mean hit the buy button. All right, where's where I left off? CNS. Gapping down 64-ish. Now this could set up for a day trade short, 30-minute low, because you still got a big void here. LBRT, gapping down. Martin, 2090. Man, there's so many of these gapping downs, but they're just in ranges now. Slug, 34. That's amazing. So many of these. Scott Leggin, 73. Yeah. Let's put that on the list. Look at this Ver. Look at this disaster. This is exhibit A of the problem you have trading bios. You just got monster gap risk. LHEN, so that's going in that. EMR alarm went off. There's a tier one. That's a gap from buy setup. I got Calyx on my other computers. Let's put EMR here. Looks great. Little buy setup, bull flag looking thing. Alex, your A alarm went off. Well, my alarm went off rather. Wide range breakout, target somewhere to the gap fill. So it's gapping up in a down market. So that's bullish. So yes, there's another one I like. Now this would be a no-brainer. Put spread down here, 118.50. I'm sure I looked yesterday. Yeah, I didn't get through all these earnings yet, but TSM was next on my list actually. All right, 8 alpha. Yeah, it's too spready. I looked yesterday, 5 cents by $1. All right, TSM. Dana, some BBIO. Yeah, so this is bearish TSM. Yeah, the TSM's lowering guidance, so that's kind of dragging down the semis too. Bottom right, look, Amgen alarm went off. That looks fantastic. Oh, I thought we would be up more in our yeah, this is a bio that got a positive gap news, and that's the risk of bios. I remember this symbol actually, and I think I posted it somewhere. I can't point to the exact day, but I remember that symbol and sending it to our subscribers in Telegram saying, it's a bio, but it was a good pattern. Okay, so TXG, I was trying to sell puts yesterday. Oh, Alex, I was asking you and you took off. Is TXG a real company? Because we could sell 55 or 50 puts. They're massive. I was trying to sell 60 puts yesterday and they were spready. I didn't get filled. All right, so look at DHI. So see, bullish gap quickly negated is not bullish. I want them to come in a calm fashion. This Stenex thing, it came in way too hard. Yeah, thanks, Scott. Yeah, I didn't think it was a bio. Yeah, so thanks. It's the